In this video, we are going to be looking at the state of the Nigerian stock market, basically by looking at the all share index and analyzing what the all share index, the key levels on the all share index. We would also be looking at the economic state of things, right? Interpreting your everyday life. Welcome to the Eaggleseye View, where we break down money, business, and investing in ways that help you see opportunities that others miss. I'm Kamal Adeomi. Let's dive straight into today's video. All right, so here you can see the all share index, right? This is the chart of the all share index, and this is the monthly chart. It's the end of the month, right? It's the end of the month and also the end of the week. So we're going to be looking at the monthly view, the weekly view, and then go to 4-hour view. There was something I saw on the 4-hour time frame, and I think that is something we all need to look at, right? Stay with me to the end of this video. This is what happened in the Nigerian stock market over the last 1 month, right? So let me interpret what this candle is so you would see. Now this candle, you could see here we have the long wick and then the body, the short small body below. What this means is that investors came into the market, right? Investors came into the market and we pumped all the way up to 146,000 basis points, right? 146,000 basis points, and then investors lost momentum, right? And then they started selling, right? We had selling, and then the market went all the way back and rested here, and the market closed for the month, right? For the month and also for the week at 140,295 basis points. This is not a good indication for us as investors in the Nigerian stock market, right? We all want the market to go up, right? We all want the market to keep moving up, but I mean, market needs to retrace at some point. It's for the health of the market to have some downturns at some point, right? So let's look at the weekly time frame. Yes. Now, if you look at the weekly time frame here, you would see that there is we had last 2 weeks, right? Last 2 weeks we had market candle in a red, meaning that investors sold. This week, I mean last week, we also had that, and you can see the candle, this big candle here. And then we had the last week, just this week that just ended, the week that just ended. This is the candle, and well, these are normal things that happen in the market. You could see it from here, and then market is going back. But however, I saw something very, very crazy, right? We all need to put that into consideration, especially if you are looking into bringing money into the market. All right, if you are a short-term trader. If you're a long-term trader, of course you know that the market retracement is not supposed to be your problem, right? Because you're in for the long game. Whatever happens, in fact, you're not even supposed to be checking your portfolio really, because it helps your mental health. But for short-term traders, well, or people who are bringing money into the Nigerian stock market newly, I don't think I would recommend a buy now, and this is what I mean. So let's go into the 4-hour time frame. Now on the 4-hour time frame here, let me open this up, open it up. Yes. Now take a look at this particular zone here. I zoomed it wide so you could see it. Now at the close of this particular day and at the open of the next day, you would see that the market, normally what happens is when market closes at 200 today, right? When market closes at 200 today, tomorrow we are expecting market to open at 200, right? But on this particular day, look, have a look. Market closed around 131,700. That's for the all share index. And then the open of the next day was 133,200, right? So there's a gap here. And now the rule of the market is, once there is a gap, the market will always return back to that gap fill it up before it to continue the move, or fill it up and continue downward movements, right? Whatever it is. And then I'm going to try to show you a clear example of this on the 15 minutes time frame. And I think this happened this week that just ended. I'm going to show you what happened. Yes, here we have it. Let me open this up again and then bring the market down. So here, now take a look at this, right? Let me take this off. See what happened here. Market was coming down and then market broke, right? There was a gap between here and here, which is this rectangle that you're seeing, right? And then markets went all the way up to fill up the gap and then returned, right? Now, how do you know where the market will return to? That is not a, should I say, you cannot tell. There's no investor that can tell you where the market is going to, where the market will return to, all right? But we can use some tools, right? And for me, I use the Fibonacci tool, right? I use the Fibonacci tool. Now, if you look at this Fibonacci, drawing from the major low, right? I mean the major high down to this particular low before the retracement. This is what happened, right? This is what happened. Market came back all the way to this point. Once market closed, or the moment market breached this gap, right? The moment market breached this gap, we had market coming back to the 0.382 level of the Fibonacci, and you would see that a lot in the Nigerian stock market. 0.382, 0.618, and the golden zone, right? The market always comes there. Many times market reacts from that point, and you would see that when market got to this point, market came all the way down, right? Market came all the way down. Now, if we are going to repeat this same process, because the market is fractal, right? The stock market is fractal. Market is always fractal. If we are going to repeat this on the 4-hour time frame, judging this, oh no, sorry, right? Looking at what happened, I'm expecting the market to come all the way down to this place. This is where we have the gap, right? And then I'm expecting market to come to the 0.382 level, which is this zone here, right? I'm expecting market to come into this zone, and then we have, so I'm expecting market to come here, market to come and fill up this gap, because market to fill it up either now or later. Market will definitely fill it. So I'm expecting market to come into this zone and then react from here upwards, right? Before we can continue the rally. Now, back to the economic state of things, right? So this is literally what's happening. We are getting into the environment. So school is beginning to resume, like schools are preparing to resume. And because schools are preparing to resume, a whole lot of people are not investing. I mean, their festive periods are lined up at the end of the year, right? So a number of people are not investing. In fact, people are not just not investing. People are withdrawing their investments to solve some daily needs, school fees, school items that people are buying in preparation for school resumption. People are preparing for the festive period. People are preparing for their occasions, weddings, burial, and all of those, right? So you also need to put that into consideration, the time of the year. So, I mean, this is my view of the market, right? This is my view of the market. So, we've come to the end of this particular video, right? So, if you want me to analyze a particular stock for you, right, let me know in the comment section. So thanks for watching. Again, this is the Eaggleseye View. If you found value in what I just shared, hit the like and subscribe button and share this to someone who needs it also. This is not financial advice, right? This is not a financial advice. This is just my view of things. This is my view of things. So just stay smart. The rule remains: stay smart, stay invested, stay focused, and keep your eyes always on the big picture. Don't mind what the market is doing now. Keep your eye on the big picture. So I'll see you in the next video, right? I will see you in the next video.